We got the Bitcoin breakout, and the very next thing Bitcoin produced was a phenomenal pullback. We have fallen down into such a beautiful zone. I want to explain to you why I'm actually loving this price action in this YouTube video. And actually, I just want to start this off by highlighting to you the most important thing of the entire video, which is this Fibonacci retracement. Ladies and gents, it could not be closer to perfect than this on this chart right now. We managed to bounce off that beautiful 0.382 Fibonacci level, which for those of you who haven't quite played around with the Fibonacci level much, is the mirror opposite of the 618 level. So if you have been taught rightfully that the 618 Fibonacci level is important in the market, well, now you know that the 382 level is a literal mirror of it. We have bounced off it phenomenally, absolutely beautiful pullback there, and we've fallen into a really nice box. This is the same box I was talking to you guys about in the very last video that I put out on this YouTube channel, so shout out to those of you that are subscribed, hitting the like button, checking that bell so you don't miss out on this very time sensitive content, because you're going to know that this was a key level that we're looking at, and this has actually done a lot to bring this market into a healthier place, and I want to discuss the rest of it with you in this video now. So one of the first things I want to do is actually just bring you onto another chart that I've actually drawn, the particular triangle that we've been dealing with here in this market. And actually, I think I've removed that triangle. Well, I'll just draw it again for you guys right now. It basically stretches from here to here, and you can see already that we have overshot that triangle just a little bit, but I'm not worried about that, and I'll tell you why in just a minute. And if we bring it back over here, we do have a very nice kind of triangle that we've still got playing in here. Now obviously the question is this a deviation and we're just going to continue trading here? And that is definitely possible, and there's a lot that kind of goes in that in favor of that argument, right? If we take a look at the fear and greed index, for example, this is not a good picture. We are still, I mean, we've been stable up here for a very long time now. I mean, this is just the last month of the fear and greed index, and you're not getting a reading lower than 70. It goes as high as 88. It's too high. This is greed or extreme greed the whole way through. Today is extreme greed. Yesterday, last week, last month, everything in extreme greed territory. So there is a lot that's actually going against Bitcoin right now, but if we are looking at this from a bullish perspective, which I'm going to do with you guys just over the next couple of minutes until we start going back to, balancing this out and talking about why maybe the bulls might not be on the right side of history here, just in the short term. Obviously we're going to balance these things out. Just to stick to the bullish side just for a second here, what we have done is potentially formed a deviation back into the triangle just for some of that really crucial support, because that is exactly what we have in this range. We have a lot of crucial support in this particular price range. Obviously, we've already bounced off probably what I would say is the most important one, which is absolutely fantastic. And if we're actually able to hold above this level, then I can't really complain too much about what's going on, because to me, especially when you start zooming out, it's just not going to look too bad, right? I mean, we did get a nice breakout. It managed to take the price up from the breakout point by about 4%, depending on how you measure it. It's going to be a little bit more, a little bit less, but still generally looking fairly good. And as long as this bounce does end up getting produced fairly quickly, we're going to be in a good place. But that is a very important as long as, because if it doesn't happen, if we don't actually manage to produce a bounce quickly, then we're basically just back inside of this pennant. And what it means is that the bulls had a chance to take control of the market and send us up to new all-time highs, but they couldn't do it. And even when they're given a chance to rebuy some Bitcoin at if Bitcoin's up here and you're getting a bit of FOMO, then this is a really nice buy level, right? But if we're not responding to this buy level with a lot of strength, then that's going to be a very strong sign that actually the real move in the market is going to be back down toward the very low $60,000 price range, at least in my opinion. And the reason I'm saying that is because it is basically do or die time for this triangle now. I've given you guys this analysis a little bit already, but I just want to recap it here. We've got a pennant where if I just kind of draw these lines out a little bit more, you will see that it stretches up to about the 37-day mark, right? From the beginning of this pennant up to the apex, we're looking at about a 37-day span here, and right to where we are at the moment, we are at 26 days, right? So a very simple math calculation, 26 divided by 37, that'll tell us that we are now 70% of the way through this particular pennant, right? And that means we've completed 70% of this pennant in terms of time. That's an important number, because typically we're going to get the breakouts between 66 and 75% through the completion of these pennants, and we're kind of, we're in the zone right now. It's fine, we can still do good stuff, but if we're getting sent down and we're going to be testing the downside, then basically the thing to keep in mind is when you approach this critical 66 to 75th percentile for these pennants, any price action you do is going to be way more important than what comes before or after that. And the reason for that is because if this pennant is indeed legitimate, which it certainly looks like it could be, then you're going to pay very, very close attention to the moves that happen within the window that you expect a breakout. That's a really, really important point. I'm actually going to repeat that just in case it was a little bit confusing for some of you. I think hopefully most of you would have gotten it, but it's very important we're on the same page about this. What I'm saying is that we've got a beautiful window of opportunity where breakouts tend to happen, okay? And if we know that we tend to get breakouts within this window, then we're going to be sitting up, back straight, leaning forward, looking intently at what happens during this window. It's like the formative years for a child. Here's another classic horrible analogy from this YouTube channel. You guys know that's what you come for. It's like the formative years of a child, and whatever that child ends up doing, if they fucking go killing bugs for fun, they might end up being a serial killer, and you can kind of tell based off that window of time. So, that's something which I think is well worth keeping in mind at this stage right now. Very, very critical time. But if we do take a look at some of our indicators, it's not actually a particularly bad image, right? Over here on the 4-hour time frame, we do have some nice Ichimoku support, a little bit lower than where we are right now. And if we end up trading sideways here just over these next couple of days, there is still some support here. And if we take a look at the EMA ribbon on the 4-hour time frame, it's also not looking too bad. We have kind of fallen out of it, but I'm not too worried about the way it looks right now. On the daily time frame, it's way better. On the daily time frame, guys, this is actually a really good chart. It's basically telling us that since we entered this price range right up to now, being 41 days, 42 days actually a price action, we do have phenomenal EMA support now that has been able to catch up to the trend and allow us to continue to move up. So if you believe that this is going to be useful, and I certainly think that it's one of the most useful indicators in the game, then this is going to be a very, very exciting sign to be seeing. If we zoom into smaller time frames like 1 hour, it's too small. You can't really extract any conclusions off it, so I'm not too worried about what that's saying here. We can take a look at it right now anyway, just for fun. But, there's not a whole lot that you can actually glean from this particular time frame, so I'm not going to focus too much on it just in this particular video here, but if we do take a look at the traditional finance markets, which obviously have a strong bearing on this, we have seen a very, very, very small slide down for the S&P 500. So this is still mostly neutral, but this is an area of support. And given the fact that this is a slow slide down and the fact that S&P 500 corrections have been quite shallow, if we're going to continue along with that trend of shallow S&P 500 corrections, you're going to have to make that decision on your own if you think that's what we're going to be seeing here. Well, then this probably fulfills enough of a correction, right? We've seen a nice kind of falling wedge pattern. It's fell down to a previous area of resistance, flipping into an area of support. That is your classic, typical recipe for the price to continue to trend up. So from that perspective, we're still looking good as well. We're actually looking fairly strong from that particular perspective. So that's another thing which I think is worth keeping in mind at this stage. It's actually really nice to see just how healthy and good these kind of pullbacks can be for the market, right? A lot of people get upset when these things happen. They worry like, why is the price not going up as fast as I wanted it to, and so on. But the reality when you come into and tune into the Sammy Loyal Four Flies channel is you're actually going to see that this is actually a really good setup for the market. It's actually a very good place for the market to be, and something that we should actually be quite excited to be seeing taking place right here. So that is definitely very, very cool, and it also starts presenting nice trading opportunities, right? Like I said, that 382 Fibonacci level looking absolutely beautiful here, and I'm not saying that it's a trade I would take, because it isn't a trade I would take, but if you are just purely trading off Fibonacci, you'd actually be extremely successful right now. The market has been responding really well to these Fibonacci levels, and you don't need me to tell you that. You can just sit silently and look at this chart and observe what we're seeing here, and it is unequivocally clear these Fibonacci levels are being respected really well. Look at this beautiful bounce off the 786 level. Look at this beautiful bounce off the golden pocket right here. We kind of trade up here. Of course, okay, we did ignore the 236 a little bit over here, but not quite over here, not quite over here, or even very recently, just today or yesterday, but then we fall right into this beautiful golden pocket 61866 fib levels, and then we continue to rally up higher, right? So these fib levels have been really good, just basically free money, and it's not just Bitcoin. Other markets are showing that to us as well, in the altcoin markets as well, which is super, super cool. And what makes this way cooler is that you guys, regardless of what you want to trade, where, how, whatever, you are going to be able to get huge bonuses with the links down below. Bybit is literally going to give you a free $500 Bitcoin position on when you sign up to Bybit using my link right here in the description, which means that is just a free $500 position. You can go long or short, whatever you like, and the profits you generate, if you make any profits at all, are yours to withdraw. If you don't make any profits and you lose money, it doesn't matter. You're not trading with your own capital. So super, super cool offer there. You need to do KYC to get this, so make sure that you do fulfill those steps in order to get your bonuses. The steps will be here very clearly when you follow that link down below. And we've also got two phenomenal no KYC alternative exchanges that are well worth checking out as well, because they complement Bybit very well, and they also give you further massive bonuses. Again, a lot of people ask me what I would do if I was starting from scratch. I would rinse the fuck out of these bonuses, because you're getting a lot of free money across the board just because these exchanges are hyper competitive. Obviously, these exchanges make a shitload of money, so that's how they can afford to do this, but they really want your business, and they are throwing money at you to get it. You don't have to give them your business, but to get that free money, you're not losing anything. So that is at a minimum, I think, well worth considering while these offers are still running. These offers don't last forever. They've expired before. They're going to expire again. But do take advantage of them if you are curious. Now, let's switch tones a little bit, and let me tell you a little bit about why I think this isn't a great setup. And I've already touched on a little bit of it before, but the first thing is that this could be a potential deviation, right? One of the big overarching ideas that I've had in this market, which obviously isn't super nice to talk about, but is very realistic, is that Bitcoin could just be in another sideways trading range now. And that sideways trading range would essentially, at the moment, look something a little bit like this, stretching a little bit like this on the downside as well, right? And, it actually makes a lot of sense. It's kind of the same thing that Bitcoin did earlier this year, actually last year, between the $25,000 price level and the $30,000 price level, where this range spanned 33%, or from candle to candle spanned about 26%. And if we measure this one here, we are looking at about 25% from absolute low to absolute high, right? So kind of ranging sideways like this would make sense in terms of giving this market a little bit of consolidation. And I think there's also a little bit of like, why are we not pumping? I think there's a little bit of like, Bitcoin, and I want to remind you guys about this, I covered this in the last video, but Bitcoin broke the all-time high when it surpassed this particular level here, but there wasn't much follow through. And then the next time that we did it, again, not much follow through. We just kind of stabilized above the all-time high. It was very weak price action. I think people were able to recognize that it was weak price action. It was a lot of, head scratching, like, why are we not moving up higher than this, given the fact that we've already rallied above that all-time high? And I think that is starting to frustrate people a little bit, and it would be very interesting to see if that does start to get reflected with very, very interesting metrics like the fear and greed index. But if we are going to continue to do that, then a sideways trading range makes a lot of sense, and I think that's actually going to be where easier money can be made as well, right? We want to see this market slow down a little bit so that we can make a more sustainable move up, but it also presents us really nice backtest opportunities where there are tried and tested support levels that just kind of make sense to, at the minimum, just kind of consider going long at least for me, and that's definitely what I'm going to be doing. I mean, this particular long level here at 61k looks super easy. The only thing I don't like about it is this wick, but stop loss below that wick is about 4% below. It's a very doable, stop loss, and then I'd be able to, if I buy here, I'd probably be looking to sell. My first take profit target would be up here at about 65. That's a 6% move. I would trade this on 6 times leverage, so that's a 36% profit. 6% move multiplied by 6x is, of course, 36. And with that, that's an easy, that's a very, very easy gain. I mean, just to put that in perspective, because a lot of people think that making money in these markets needs to be like some crazy like ADHD fucking trigger happy gambling thing. It absolutely doesn't. You can just kind of like look at support levels and just kind of long them, and look at resistance levels and just short them. I mean, it really is that simple. It's just not easy to do in real life because you overcomplicate it because of gambling mentalities a lot of the time. But to put this in perspective, if you've got $500 and you manage to pull that 36% profit, I just want to show you guys just live on video right here, that is a 680% profit. $680 account, just off that first free $500 position that Bybit would give, just in this very crude example. Like I said, it's not a trade that I would necessarily take, but it does serve to illustrate, how cool that could work. And by the way, if you end up losing that money, that's going to be about a 4% loss again on 6x leverage. That's a 24% loss, and that would be money that, wasn't even yours. So, very, very nice risk-free, moves there, that can be quite easy to digest the idea, which I definitely like the sound of. Now, one of the big things that I think is still going to be holding Bitcoin back is just, like I said, it's like the EMA thing, right? The EMA ribbon has definitely caught up to the market, and it's a momentum thing, right? So it always moves a little bit faster, but the Ichimoku cloud still hasn't been tagged, and it's only been tagged once so far since it was a red cloud over here. Before before it was tagged twice, so maybe we get another tag, I don't know. Within uptrends, the market does tend to tag it a couple of times. Now, the previous uptrend that we had in 2020, 2021, we actually stayed away from the Ichimoku cloud quite a lot. We didn't quite come down into it. We did still get 2 tags though. We got one tag over here and then another over here, both of them back in 2020, and I think that's very important to be keeping in mind. We've definitely got a setup here where the market could be returning back to down to this Ichimoku cloud. One of the big reasons for it is the way we've moved up so quickly, right? When we move up so quickly, we naturally need to have corrections, and the corrections need to be in accordance with how big the move was. This one was a funny correction because we kind of did the correction before the move even started, which is like preloading extra fuel in the tank, even though you don't need that extra fuel. Almost like putting nitro in there and then getting ready to just fire it off when the market gets ready. But now I think we're in a much more kind of normal situation where that kind of pullback would make a lot of sense. So that's kind of a little bit of the bearish thesis. It's still not actually bearish, right? Those of you that are paying attention to this, who don't have the peanut-sized brain, I don't even know how you guys end up on this channel. You should go watch somebody else. There are a lot of channels that suit you on YouTube other than this one. But most of you guys obviously watching this video are going to understand that even the bearish thesis is actually quite bullish just from this particular perspective. Obviously, we can dial it up a notch, and you guys still know my opinion. I still want to see a $30,000 Bitcoin. I don't necessarily think we're going to get one soon, maybe even ever. But I would love to get a $30,000 Bitcoin. I think it'd be one of the healthiest things that Bitcoin could do. I think if we went down there, I don't think it would be long, right? I think that Bitcoin, if it did go down there, would most likely just kind of tag it and then come right back up. There is the weird argument of if you've fallen by more than 40%, then you're probably in a bear market for Bitcoin, and that's definitely true. That definitely holds a lot of weight. I would definitely take that quite seriously. But at the same time, it does remain the strongest area of support in this chart, and it is completely untested, which is just such a shame. It's just such a shame. You don't want to see that, right? You want to see that these strong levels of support get back tested, because it just tells you, all right, everything is clear, right? It's almost basically what it means, right? The way I want you to visualize these kind of support areas is that there are loose ends, and you want to tie up these loose ends. The way you tie up these loose ends is by coming back down and tagging them. And again, that's why I think that on a very, very short-term perspective, this tag of the 382 level in Fibonacci is so important. It's just finishing unfinished business, and that is always a very, very good thing for this market, to stay relaxed and continuing to move up in a nice, very sustainable manner. Now, of course, if we do start to fail these levels, you guys already know the deal. We're looking at the very low 50s, failing that, the 40s, and I think the 40s would be more likely. We're still looking at the same situation. I mean, the fact that this does represent a 40% drawdown to me is a big deal. This $44,000 price level, fuck it, maybe even a little wick down to like 41, 42, whatever. But 40% is Bitcoin's beloved number within a within a bull market in terms of pullbacks, which is obviously quite big. A lot of people are going to be quite scared with a 40% pullback, especially when you live through it, and especially if you've been buying, above these levels. But it is a really nice price level to return to, and it's still not something I'm ruling out even now, especially until and unless we break that high. The 40% drawdown is still in a beautiful level. And one of the things that I like to do is just imagine what the world would look like as a trader, if certain conditions are met. And in this case, the condition would be a 40% pullback. And it's just the most typical setup ever, that the price would come back down into basically its only close, strong area of support, right? And it's not even close, but it's the closest one we've got in terms of strong support on this chart. So that to me definitely also carries some weight, and it's definitely also something I'd be interested in taking a look at. Now, moving over to Ethereum against Bitcoin, we're continuing to see that weakness on Ethereum right here, which is nice or not nice. I don't quite know what to make of it, but we are getting a rejection here on Ethereum against Bitcoin, which is another sign of more trouble to come. That doesn't necessarily mean bearish trouble, right? A lot of the time, these altcoins are actually going to get weaker in front of Bitcoin because Bitcoin is just so strong, right? And if that's the case, then actually we don't really have anything to worry about, because alts are probably still going to gain against the dollar. It's just not going to gain against the dollar as fast as Bitcoin. However, alts really crash and really die. They really get decimated when Bitcoin crashes. And it looks like the Ethereum market is already kind of preempting that a little bit, because what we've now had is that drop below this crucial orange box, and even a back test and a rejection within that back test. The rejection hasn't quite matured yet, obviously. It's only been a day, not even a day. So we need to see how this moves, and definitely over the next days, maybe even the next week, toward the end of this week, if we do end up kind of moving down again, then that's going to be it. I just cannot see, like, that is your kiss of death. I cannot see how a recovery would happen at that stage. And the only thing I'm going to be doing is looking out for where I can buy some Ethereum, because if we are going to get that kind of drop, the number one thing I want to do with my capital, bar none, the number one thing I want to do with my capital is shove a massive fucking stack of Bitcoin into Ethereum, because we're already starting to get the sentiment that Ethereum is dying, and Ethereum's no good, it's not working, it's too expensive, whatever the fuck people are saying about it. There is always something, right? I mean, there's always something on either camp, but when the price is dropping, it just looks a lot less attractive. We're starting to get a lot of that sentiment back in, just a lot of negativity for Ethereum. Actually, I'm saying this out loud, that's actually kind of bullish, but for me, when that kind of negativity starts coming in, but the price is actually quite low. I mean, I'll be honest, I actually considered buying Ethereum down here. I mean, I think this is a phenomenal entry on Ethereum, honestly. I mean, even if Ethereum drops by half from here, if it drops by 50% from here, it's still a really good level to be buying Ethereum, in my opinion. I haven't done it yet, but after what I just said, I mean, I was already aware of this, but just the fact that everybody is like so strong against Ethereum right now, that's not how drops tend to happen. That's actually usually how bottoms tend to happen. So I'm just putting that out there. I haven't decided to do anything yet. It's still not a chart I can buy, right? Like, even though from a psychological perspective, people are quite upset with Ethereum, this is a bad chart. So, I'm going to wait to see how things go. If we do end up dropping a little bit further, I will be buying. I still haven't gotten around to making that Ethereum video. I know you guys have asked for it. I promise you that will be coming. I just want to make sure that I do it right. I'm actually going to get my analyst on that to give me a really good set of notes for that particular video. In fact, bear with me, ladies and gents. I know this is really unprofessional, but I'm just going to ask now, please give Yeah, I just figured, you know what? Let me just do that right now while I'm on video. It's not the first time I've done something like that on video. I've even made trades on video and stuff like that before, but that's all good. We're all basically just chilling in my office together. That's the way I like to see it. Let's take a quick look at the dollar as well. The dollar has continued to stabilize a little bit below its area of resistance, but to me, this is more of an indication of continuing on upwards. I really think that we've got a storm right now where things could end up getting pretty bad for crypto, at least just for the next couple of weeks. It wouldn't be a bad thing at all. It would actually be really, really good, but it might mean that we'd be stuck not setting all-time highs for a little bit. Obviously, it would make perfect sense with the halving. We've already been over this. The weeks before and the weeks immediately before and immediately after each halving have always been very boring. We've established that halvings are sandwiches, and we've got halving sandwiches. Shout out to those of you that did write halving sandwiches in the comments. We had a lot of those comments in the last video, which is absolutely hilarious because, like I said, those of you that have made it toward the end of the video, you're going to know what I'm talking about, but absolutely everyone else is going to be like, what the fuck is a halving sandwich? So that's absolutely brilliant. Let's spam that in the comment section again. If you're on board with me and you like that halving. Whoa, hang on a second. I haven't seen this. No one's been talking about gold. I just took a look at my my watch list, and why is no one talking about gold, guys? What the fuck? How did I not know about this? Whoa, this has been happening for like 2-3 weeks. What? Anyway, so there's gold at 23.50. I've been very, very vocal and increasingly more and more vocal over the recent weeks and months. Not weeks, just months. That I think gold is going to be breaking out and breaking out quickly. This is actually a lot faster than I thought it would break out, though. But yeah, look at that phenomenal little rise up there for gold. Am I looking at the right? Why is no one talking about this? I'm so confused. I feel like this might be like the wrong chart because 23.50 gold is a really fucking big deal and no one's talking about it. But anyway, the move has started. So now, if you haven't been able to get in on gold, or if you haven't bought as much as you want, the only really, the only real thing that you could hope for at this stage, really, and from the way I see things, is the back test of this level. So I don't know if we're gonna get it, but that would be, the next only kind of saving grace for this, for people who aren't really in gold yet. Maybe this area actually has to be moved up here. It really depends. Honestly, that would make sense. How are gold's back tests though? Gold, I need to study gold a little bit more. It looks like it has shallow back test. Look at this. It misses key back test ranges. This would have been the key back test range and it missed it. Look at that. This would have been the key back test range and it missed it. Look at that. This would have been the key back test and it missed it. So it looks like gold tends to have quite shallow back tests. Those of you that have been following gold for longer than me, maybe for longer than I've been alive, please let me know in the comment section below. But it looks like the 2100 level could be that next potential buy. My opinion remains the same. I still think we're going up to $3,000. Actually, I revised my opinion in the recent months, and I said I think we're going higher than 3,000, probably $3,500 to $4,000, like a big move. We've already started to fulfill that very quickly. It's a good feeling to be on the right side of history for a long time, but when you're not proven right for a long time, you just kind of have to wait for it to happen. It can be a little bit frustrating, but when it finally does happen, it's like a massive relief, and it's like it actually gives you the what is the word, like the reaffirmation. I don't know what the word I'm looking for is. Like it gives you that, it reaffirms that you should keep doing this, even though, and this is actually a really difficult thing for traders from a psychological perspective, and I'm definitely talking from my own experience too. When you've got the right attitude as a trader, when you've got the right skill set, the right approach, the right everything, but it's just taking you a long time to be proven right, it can be quite frustrating, right? But when you do hold on and you end up being correct, just like gold here, obviously you guys know that I've bought some real physical gold as well, and I've been telling you guys about it on this YouTube channel over the last year probably. I've been talking about that, maybe even more. When you're in that kind of position, and then obviously the market proves you right, it's like, okay, like that gives you a little bit more, like, it just gives you a little bit more confidence that the next time when you're in the exact same position again, because that's basically what being a trader is. Like, you've got the right idea. If you're a competent trader, you got the right idea. It's just the market takes its time to get there. It shows you that that's okay. Just stick to it and mind your own fucking business and do something else while the market is figuring itself out. It's going to get there eventually, right? Like, you're watching your kid go through their emo phase. They're not going to stay in emo with fucking 17 piercings all over their body forever. They're going to come out of it eventually. Just hold on, don't disown them, and everything will be okay. And very, very, very much the same attitude for trading as well. Definitely an important one. But ladies and gents, that is going to be all from me for today. If you have enjoyed this video, you have some phenomenal offers with the links in the description below. Again, a free $500 Bitcoin position on buy, but they're also running a competition with a huge prize pool available as well, and some brilliant no KYC alternatives that you must check out as well if you like these bonuses. BingX allows you to trade traditional finance markets as well, like Tesla and Apple and S&P 500 and Forex and gold. There's a lot of different instruments you can trade on BingX, and 2bit, another phenomenal crypto exchange, again, not requiring a picture of yourself or your ID, and still giving you huge bonuses as well. So check them all out if you want to scoop up that free cash and kickstart your trading even further. Ladies and gents, thank you all very much for tuning in. You know what to do if you have enjoyed this video. Subscribe, tick the bell, hit the like button, all that good stuff. Super time sensitive content, you don't want to miss it. And I'm going to see you all in the next one. Cheers.